Good morning, everyone, and welcome to another installment of the Prosperity Through Multifamily Real Estate Investing Podcast. I am your host, Real Estate Cody, and with me, as always, my one and only co-pilot, the coffee connoisseur himself, Mr. Brian Alfaro. Brian, good morning, my friend. How are you doing?
Good morning, Real Estate Cody. Nice to see you on this actually kind of sunny morning here in Houston. It has been raining like crazy. It's been washing everything, but that's okay. It's been hot and heavy here, so we need it.
Oh man, God, we needed it. But like the monsoon has been coming for the last probably week and a half. So it's good.
We're in hurricane season, so just knock on wood. Hopefully no hurricanes and we'll be all right.
Yeah, look, we can do a whole nother podcast episode on the impact of insurance, loss runs, and things like that. So let's hope and pray that hurricanes go far away from us. We don't need any more of that. But hey, man, I'm really excited about our guest today on the show. We were just having a really good dialogue and fun dialogue before the show started. So we figured, man, we got to hit the record button so we don't shed too much of great insights here. But man, tell us who we're talking to today.
Yeah, we're excited. Today we have Mr. Saket, and he is the founder and CEO of Impact Wealth Builders. #1 best-selling author, investor, syndicator, tech enthusiast, and philanthropist. Saket is the founder and CEO of Impact Wealth Builders, where he's passionate about achieving financial freedom through real estate. He has over 15 years of experience in real estate investing, and over the last 5 years, Saket has taken a particular interest in B and C class multifamily apartments that have strong fundamentals. Saket, along with his partners, have built a portfolio of over 2,000 units totaling $200 million in assets across several U.S. markets, generating consistent double-digit annual returns. In addition to investing, Saket currently serves as the business operation leader at Airbnb headquarters. Prior to that, Saket, in his role as a business consultant, built, launched, and led a profitable new venture in the technology and financial sector. And when not working, Saket loves time with his wife of 19 years. That's very impressive. Congratulations. And 2 daughters. Welcome to the show, Saket.
Well, thank you, Brian and Cody. This is awesome. Got to be here.
Saket, we are excited to have you here, man. I know we were, like I said, we were just having a really fun conversation before the show. So I know the audience is really going to enjoy listening into your experience and what you have to share. But hey, we got to start off with the tagline here. Saket the Rocket. That's what we're going to coin you after this conversation. Okay, that's a perfect.
That has become my unofficial name. It's unfortunate.
You almost need to change your business logo. I'm just saying, man.
I kind of do that. Hey, you know what? I'm launching a podcast. I had somebody telling me just call it Saket the Rocket.
There you go.
That's probably not the best name, but yeah, you're right.
Everybody loves a tagline or punchline today, man.
They do, don't they? Yeah.
Well, hey, Saket, man, we're really excited to learn more about your background and your experience here. So why don't you give the audience a little bit more insight into, your background and kind of how you found your way into being a commercial real estate investor?
Yeah, definitely. So one of my claim to fame is I got laid off back in 2016, right? And at that time, it was one of the hardest things I could have ever dealt with. Being an immigrant, and I've always had a good pedigree of education. Went to MBA, Columbia Business School for my MBA. Worked at all the Fortune 500 companies that you can think of, one of the top consulting firms. Everything was done according to the script. It wasn't supposed to happen to me, the layoff thing, right? I mean, it can happen to a lot of people, but not me. But it did happen. Right, that's when that was the defining moment for me, where I took control of my own finances in a way that I can influence it, right, and not be a victim of the market, of some 5 people, 10 people sitting in a boardroom making a decision for no fault of mine. I may get impacted, and worse, just not me, it's my whole family. Right, we had to take our daughters out of the private school. We had to move in with our in-laws. We had to move states. It was just very, very taxing. And that's when I realized, the most important thing was the switch between cash flow versus net worth, right? I had a big net worth, but I had to liquidate everything to live off of that. And that wouldn't have worked out because that would have had the future consequences as well, right? So I started looking for cash flow asset classes, and talking to my peers and my ecosystem, nobody knew that, right? So I essentially started looking outside. And that's really how I forayed into expanding my single family portfolio, but quickly realized, like I'm sure a lot of your listeners or yourselves or somebody else, where it'll take me 1,000 years to scale to a point where where it's going to have a material impact on my lifestyle. So switched to multifamily, started as a passive investor to essentially, I was probably the most active passive investor. I would be on a call every day, any opportunity I would get to tour properties, I would, and then I caught the bug of being an active. And since last several years now, I've been an active syndicator along with being a passive. And multifamily is the core asset class that we do. However, that's not the only class. We're looking at energy efficient opportunities as well, Bitcoin mining, ATM funds. We're working on several different opportunities to essentially bring a lot of diversity to our own investors and make sure that that within our offering, we're diversifying to give them better returns and meet everyone's needs.
So I can really appreciate you sharing that very difficult story. And there's a lot to unpack here. And I want to go back if we can, because I think your story probably will resonate with a lot of our audience, especially those who are old enough to go back and relive the days of the great financial crisis. Because if you think back in the last major recession, 08 to 011, I mean, so many of those stories happen, and so many of those situations were, affected so many families, people that were high income earners, great secure perceived secure jobs that were lost, right? And I know I had people that were close to me in that very same predicament where their lifestyle downgraded substantially because they lost their high income or job. And it always reminds me of the great quote that Warren Buffett has, and I'll paraphrase it. No matter what your position is, your title is, your job is, if you're dependent on one source of income, you're always one step away from being broke.
Completely. I mean, I lived that quote in my life. At that time, I only had one income, but everything else was in stock. But I didn't realize that income is as good as cash flow. Right? And you got to look at cash flow differently. There are multiple dimensions to cash flow. It could come through different sources. It could come through your income, but it cannot be 100%. Or I believe I've since changed my philosophy. Your income cannot be a major source of cash flow, because when that happens, hopefully you're lucky and you'll always be employed. But it's not just about, now I want to talk about one other thing here, Cody and Brian. I think your listeners may appreciate that, because I got reached out by a friend several years ago saying, it's like, you're doing everything right? Why are you causing havoc in your family? I'm like, what do you mean? Tell me more. What gave away, right? So he's basically saying that, hey, you know what? You just continue work till 65. You'll have good retirement. And why are you going around, traveling around, finding assets, talking to people, networking, attending seminars, conferences, and all that stuff? Why are you doing that? I told him, you are 100% correct, because I knew where he's coming from. I'm like, you're 100% correct. But let me challenge that thought, right, in multiple ways. One is, you think I'm going to be alive till 65. That's a big assumption, because we don't know, right? We all don't know. Second is, you think I'm going to be employed. But let's say I'm alive. You think I'm going to be employed, but what if I have a severe sickness? What if I have a disability between now and then? I don't control that, right? The third is, you think that someone's not going to lay me off, that I'm going to have a continuous employment and I'm going to enjoy working. And lastly, you think I actually want to work till 65, my friend? I don't want to, right? So I'm sure I come with a lot of other reasons to challenge, but eventually when you start thinking about that perspective shift is, all of us have been brainwashed that jobs secure. Jobs not secure. Your employment, until it's there, is a steady paycheck. It's a false sense of security, and which is okay, as long as you're aware of that it's a false sense of security.
That is
nugget.
Boom. I mean, that is so well stated, and you're absolutely right. And I really think this puts things into perspective, because what I think people really need to be thinking about is the future forecast here over the next 24 to 36 months. And, right now we're in a very interesting market cycle where the labor market is extremely tight. We have a supply demand dislocation. We're in this inflationary period. You have Fed monetary policy that is taking a very aggressive stance on inflation, combating that with a rising interest rate environment. And we are yet to see the long-term impact of this Fed policy. And we heard it just in Jay Powell's recent Fed meeting, right? Where there's going to be some pain. And I think it basically solidified the thesis that there's not going to be a soft landing here. This is going to be a very hard landing. And what that means is, and what that's going to result is an impact to the labor market. Right now, the labor market is such that the lever is more towards the employee, right? Yep. Hey, I can go command a certain wage because you need help. But fast forward 18, 24 months from now, when employers are going to have to be laying people off, it's going to be a completely different landscape for, employers and employees. And it goes back to your point where I think when you think about having a career and a fixed income, especially if you're experienced, I don't know how long you were in your industry altogether, Saket, but think about somebody who's been employed for 20, 30 years. You're accustomed to a certain title or position within your specialty. You're accustomed to a certain salary. Well, in an economic downturn or cycle, typically what are employers looking to do? They're looking to cut expenses. Well, who's going to be the first ones to be cut? Probably those who are earning the highest income salary, because I'm going to go replace it with the lower income salary from somebody who's just getting started to get maybe somewhat of the same kind of quality of work for a much lesser pay. So I think to your point about, man, are you even going to be employed by the time you're 65? These economic downturns really can impact those who feel like they have that sense of security, as you alluded to.
Yeah, and I think I would like to just kind of let's pull that thread a little bit longer, if that's okay. I think it's the transformation is going to happen. Right? Transformation is change. Change is going to happen to all of us, either we like it or not. There could be two driving forces for transformation. One's external, one's internal. External, you cannot control. You just have no idea what Jay Powell is going to do, what Fed's going to do. What Ukraine's going to have, what's going to happen to Russia, Ukraine, Taiwan, who knows, right? And you can go in circles trying to sort that thing out, and hopefully your predictions are right. Nobody knows, right? Because no one has a crystal ball. If anyone did, they would not be listening to this podcast or my podcast or anyone else's podcast. They'll be sitting on a beach, and we would probably be listening to them. So I think if that is true for a second, right? You cannot control the external, but you can control the internal. And internal is really the reprogramming, correct? And all the elements you talked about, they're all external, right? You can't control them, but it's coming. Something is coming which is not going to work in everyone's favor. That's a given fact. It's a matter of weeks, months, years, right? It's coming. So now the question is going to be, can I swear on this show?
What was that?
Can I swear on this show?
Oh, go for it. Yeah.
Perfect. You can either bitch and moan about it, or you can say, you know what, it is fine. It's going to happen. I have no influence towards it, but how can I change myself to not be the victim of that external influence? And a lot of that's going to happen. I was talking to some of the friends last night, and they were saying that, I'm just gonna up my skill in technology to go find a better job, right? Because what I do, I'm not liking it. And we were kind of having a back and forth conversation about it. I'm like, what is the likelihood? And I'm just challenging the thought, not trying to be a smart aleck in the room, but more, hey, you know what are the chances you're going to like that new technology, new job? For how long are you going to like it? He's like, I don't know, maybe another year. I'm like, what are you going to do after that? What are you going to do after that? But it eventually came to a point where you're right. I can't keep doing that because I'm at an age where I don't want to do that, right? Then we started talking about, okay, instead of upgrading your new skill, is there something else you can do? Can you learn about the financing world, right? You don't have to become an investor tomorrow, but it takes a path. It takes time to unlearn and then learn a new skill, right? Because you have to change your paradigms. So I think that part is where I want to focus on to make sure is that your audience walks away with, there's a lot of noise in the market, a lot of fear, a lot of anger, frustration and I'm not a political guy. I have no political affiliations whatsoever. You can blame Trump, you can blame Biden, you can blame the next president, you can do whatever, but that's not going to change your outcome. Right? So let's acknowledge that world sucks, well, life's not fair, but let's acknowledge, just carve out an hour to do that, a week to do that. But after that, Let's figure out a way how we're going to move forward. And the only way to move forward is to increase your current education level and exposure level. And I'm not talking about go get an MBA from Columbia, which I did. And I wish I didn't now, looking back, that because the amount of money I spent, I could have done very different things knowing what I know now. But it is what it is, right? So kind of like listening to these podcasts, talking to people like yourselves, like listening to other developing a different ecosystem, where are you going to learn that? I'm going to stop for a second because I can rant on this forever. So I'll let you guys kind of navigate the conversation the way you want to navigate it.
Well, Brian, I think Saket just highlighted a lot of great insight into what it takes to have grit, right? You know, Saket, if you go back and you look at your experience of being laid off and having your lifestyle completely impacted, and probably a lot of fear, right? What in the world am I going to do? How am I going to provide for my family? And you decided to make a choice to take control of your situation, acknowledge the situation, and say, hey, I'm not going to be a victim to the system anymore. I'm going to go control my own financial future, you know, and then taking control in going out there and doing what you needed to do to put yourself in a position with your investing in your business now to where now you have financial freedom, right? Now you're providing for your family and you have your time freedom back, which is ultimately the most important currency that we have.
Yeah.
You know, so Brian, I know we talk about this a lot where there's so many guys that we hear all the time, especially, you know, especially high net worth individuals, C-suite executives, doctors, IT professionals, lawyers. They're so used to being the most highly intelligent people in the room. And they think, okay, I'm going to go out there and I'm going to be a real estate investor today, or whatever. But it's a completely different paradigm and it's a completely different mindset. And it takes a lot of grit and determination to weather these type of challenges. And so, Brian, what are your thoughts?
Yeah, I think the investor mindset we're talking about is definitely, it's not an overnight switch, right? It's not like you're going to flip a switch in one day. You're just going to go out there and do it. It's very, very, very hard to not only have that mindset change, but the next hardest thing to do is to actually go out there and take action. What 90% of people don't make it, not because they don't understand or they're not educated. It's because they then don't go out there and take action because they have the fear of failure, especially if you're very successful in your job, you're in a high level position, you're used to being good at your job. The idea of trying something new, investing in something different, starting a new business, and the fear of failure that comes along with it, that's the mental block that a lot of people have. So all this stuff that we're talking about, the mindset shift, the paradigm, and then going out there and taking action, it's very, very hard, but we all start from somewhere and we all start from zero. We all start with zero real estate. You know, we all start from nothing. So going out there and taking action, listening to these podcasts, talking to people like Saket and us, that's how you get started. And the best way to get started is by doing what we're doing, educating, and then going out there and taking action, partnering with people who are maybe where you want to be.
Yeah, and I you know what, I'm going to sound like a broken record, and that's okay because I think the message needs to be crystal clear and probably repetition. Right? So I think it's more, you guys hit the right thing, right? Just the mindset. I think the key thing is transformation and mindset. And you know, folks saying, I get pinged several times like, hey, where can I invest? I'm like, I don't want to even answer that question because that question is not the right question, right? The question needs to be, who do I need to become to invest? You can have 100,000 or $1 million, right? I can tell you an opportunity, but I'm going to tell you an opportunity that would work from my perspective. I have no idea what your perspectives are. So let's sit down, let's have a conversation, but it's only going to, my hope is going to be not to sell you an opportunity because I don't want to do that. My goal is going to be by the time you walk out of that conversation, you're going to be so challenged in your thinking that you're going to force yourself to learn. Right? And that's the goal of our podcast, your podcast, everyone's podcast is we're not giving answers because there is no answer. Because my answer, your answer is very different than your listeners' answers, right? Everyone's got their own journey. But what we're presenting them is an ounce of inspiration. Hopefully people can learn from our mistakes. But the second part is we're offering more questions than answers. And then then the search begins. And I had a very good mentor who said, when the student is ready, the teacher appears. Right?
I love that.
Most of us have lived a life. Let me find the best teacher to teach me real estate. But the key question, are you ready to be taught? Once you're ready, you'll find a teacher. No doubt about it. I mean, there's so many people who would love to share their insights.
Brian, that's a nugget right there, man. That's such a great statement that you made there, Saket. And I want to kind of use this as a segue into what you just mentioned about asking the questions, to people's question, right? Like, hey, where should I put my money? Well, you have to figure out what your investing thesis is. What is your investing appetite? What's your risk tolerance? Who are you as an investor, right? Which kind of leads me into your approach and your business at Impact Wealth. You have a diversified portfolio where, you probably have an expertise maybe in one area more so than another, but you have a diversified portfolio of offerings that you provide to your investors for diversification. I want you to speak to that, if you could, to talk about how that's in line with trying to give investors really what it is that they're looking for, right?
Yeah,
versus just focusing on one vertical.
So I think I want to be clear. We have not yet provided the diversified offering. So far, our offering has been predominantly multifamily because that's what I know the best. Right? That's what I have done last 5 years. That's really what I know the best. So I'm like, you know what? Let me get that portfolio solidified a little bit. Now we're at a point where now looking at other opportunities because I've shifted my own script. Before it was more about cash flow because that was a problem I was trying to address, cash flow and tax savings. Now it's more about really we're trying to figure out how to give people the freedom. And there could be freedom could mean multiple things to multiple people, right? It could be freedom of time, freedom of place, freedom of choice. There could be multiple things about freedom, right? And when we started looking at that paradigm, and we can talk about why that shift happened, but more importantly, everyone's trying to look to solve a different problem. Everyone's not looking at multifamily as a solution because it is not a solution for everyone. It's a solution for a problem, which is a great solution to a problem, but not for every problem, right? So once we start looking, when I started talking to my investors, they're like, you know what, I understand this A, it's great multifamily, but I'm actually looking for this B, C, or D. And once it started happening a lot more often, we're like, you know what, let's figure it out. Is there a different offering that we can also bring to our investors where the returns are less volatile than stock market? That was a key thing, right? You still have, the thesis hasn't changed. Our framework hasn't changed. Just the asset class has shifted. You still have more control. You still are adding value, right? It's still passive wealth and it's less volatile than the stock market. And most of it is inflation hedged, right? So we're still, our thesis is not changing because we believe that that's a very important structure, our foundation pillars that we don't want to sway away from. So with that in mind, what now we're doing is we're looking at crypto mining. Now at the crux of it, somebody could say crypto, that's such a volatile asset, right? And that crypto could be, Bitcoin could go to zero tomorrow, right? All of that is true, right? Anything could happen. There could be an earthquake tomorrow. There could be a nuclear bomb tomorrow. We can start going that path where every single thesis has holes. No thesis is perfect, but it's more about the probability. Where the world is having, like one of my good friends, and I listen to him a lot, George Gammon. He always says, there is no certainties in the world. There's only probabilities, right? So don't say anything is impossible. It's the probability of that event, occurrence of that event is very low. Does not mean it's impossible. Nothing is impossible. Everything is, but the probabilities are a little more. Right? So when you start thinking about that stuff, probabilities of a certain asset classes to outshine the other compared asset classes, which is essentially the financial market, is fairly high. Right? And then we started looking at the risk-adjusted basis. Like the crypto mining fund that I'm looking at right now, there's a few crypto mining operators that I really like, and their returns are like 124% per year. Now, that's exciting, but there's a big but. Anything that high return is going to have a risk associated with it. But then we build out a model where we can make sure that folks are understanding if you had $1 million, if you put it in real estate or multifamily, it's going to look like this. And these are the associated risks. If you want to put it in crypto, it's going to look like this, but here are the risks associated with that. And then they can make a decision which way they want to go. Right now, unfortunately, I can't give them that offering because while I understand it, I haven't done enough due diligence to bring those offering to my investors.
Yeah, I think, that's a great explanation there, Saket, because I think what you're referring to in my mind is what I like to reflect on as value investing, right? And when I'm reading a book right now that's kind of studying some of the world's most renowned investors, and predominantly most of them have been in the equities market, but the thesis is the same. And Ben Graham, probably one of the most historically known investors in the stock market, he references in his early teachings the difference between value investing versus prospective investing, or whatever he coined it, which is basically when you look at the value of the asset or the investment itself, it's going to be misaligned with the market's perceived value, right? People will pay X amount of dollars, whether on the upside or downside, right, because of their perceived value. But the intrinsic value of the asset or the company itself is most important. So what you're referring to when we talk about these alternative verticals is what is the intrinsic value of the asset type, whether it be multifamily, whether it be Bitcoin, whether it be industrial, like all of these different product types in investment verticals serve a purpose, right? And they serve an impact to the global economy as a whole, and things like that. And so I think that's how you have to really look at it.
And I think I'll just sorry to interrupt you, but I'll add one more thing on top of it, right? I think it's going to be, if somebody wants to double or triple or quadruple their money tomorrow, I know I'm not the right guy for that, right? Because that's a value investing principle, right? You're not trading, you're not gambling. You are taking your time to study a thesis, develop your own perspective. Hopefully you have done data behind to support it, and then you stay in it. There's a big component. I'm sure you face it all the time. Hey, you know what? I got a very good friend of mine. I've known him probably for like 30 years now. He and I were talking after talking to me, he just went ahead and invested in the REIT. I'm like, what did you just do? He's like, what do you mean? He's like, it's the same thing. I'm like, you completely misunderstood what we were talking about, right? REIT still stocks, REIT still equity. And oh, by the way, let's not even talk about the tax aspect of it. So which is where very important is half knowledge is not good. Right? If you're going to do something, at least talk about it with somebody else who may give you a perspective to think about. You may still go, if my friend still wants to do REIT, I have no issues with that, right? But at least just because I said an asset class is going to do good, you go and buy a REIT, there's a problem in that approach, right? And the problem in that approach is you're looking for quick solutions, and you can't do that. And value investing is not about, like Warren Buffett holds a lot of money in cash, not because he doesn't know how to deploy it, because he's waiting for the right opportunity to buy it. But in that meanwhile, he's reading 500 pages a day of annual reports, right? He's not sitting on the beach. He could. He can probably buy beaches, but he's not sitting on the beach. He's investing his time in learning and growing it. So I think I would just kind of add to that as in, you got to develop a thesis, and that thesis has to be your own first, and let other people challenge that thesis. And that's a great thing. Somebody can challenge. You don't have to be right or wrong. You have to be able to justify why you came to what you came to, right? So because that brings critical thinking, that brings a whole lot of aspects into your own thinking process, and you're going to grow as a person.
Absolutely. No, that thesis is super important. And I think one thing you also alluded to, Saket, that's really important is time. We see so many investors, with social media and YouTube and the internet and all this stuff, right? You see all these people with the cars and the houses and the watches and stuff, and everybody thinks you, kind of to your point with the REIT, everybody is looking for that quick solution. Like, how can I go invest $100,000 today and in 12 months get $200,000 back? Now, we've all heard of the stories, the Phoenixes and the Austins and stuff where you see these exits in 12 to 18 months. But the reality is real estate or alternative assets in particular, they're a long-term wealth building play. The part of the reason we love them so much is because they're very slow. They're not as volatile. You can't sell them on a dime. They're illiquid. So I think if you're going to have this investor mindset, which we're still kind of talking about, you really have to understand that this is a slow, patient game. Education and time are your friend if you want to be successful.
Yeah, it's kind of like, it's funny you said that. Nobody invests their 401k to double next year. Nobody. Nobody does that, right? Because the thinking is, I'm going to put $1,500, $8,000, $200, whatever you put in every month. And then when I retire at 65, 70 or something, is going to be a big pot of money. whatever it ends up being. It's going to be bigger than what you had expected, hopefully. Right? But it's kind of funny how we all forget when you come to the real estate side.
Yep.
Because they're like, hey, how can I double my money in like 2 years, 3 years? They're like, you're not going to double your money in the stock market anyways. So why are we putting that extra pressure on the asset that's actually much stronger than stock market? But and then you bring in, then you must have heard that is, well, real estate is a liquid, right? I hear that all the time. Real estate is a liquid. My comeback to that is, when have you needed the money and stock market was up? Never. Nobody wanted to take the money out of stock market when the market was up. It's always down. And if it's always down, you're probably not going to take the money out anyways, because you're like, I don't want to take it out unless your situation is such that you have to. Most people would say, I'll just wait it out, right? So what's the advantage of it being liquid or illiquid? And the second thing is, because real estate is a liquid, it actually works in our favor because emotions don't control the real estate prices.
Yep.
It's actually the macro, it's the economy, it's the situations around you that controls it, that drives it. It's never an individual investor's emotion. You can't change the value of a real estate because of one tweet from Elon Musk. You cannot. It's just impossible. At least in my thinking. I don't know if it's impossible. Nothing is impossible. There's a very low probability of that happening.
Brian, this sounds all so familiar, right? Because I think we completely align with that exact statement and thesis there, Saket, because you're absolutely right. And to your example, where when the equities market is down, what happens? People do get fearful, they get emotional, and they do start pulling out, right, and pulling their positions. And it's like, that's the worst time you should really be pulling your position, right? But it goes back to your point about people needing to gain a fundamental understanding. We're talking about the difference between being a speculator, thank you, versus an investor. An investor is somebody who's patient, who understands data, who understands that time in the market always beats timing the market. A speculator is trying to buy low, sell, or trying to buy low, sell high, and trying to time that market in hopes of, like you said, doubling their investment and hoping to hit it big, when the reality is 99% of them never afforded that opportunity. So
correct. I mean, Warren Buffett said the same thing, right? So he believes, now he's a stock market proponent, so I'm not saying he's right or wrong. That's his thesis. Who am I to challenge Mr. Buffett? But he's thinking, once he passes away, he wants all of his wife's money to go into index fund, right? If a guy like that is doing that for his own wife, right, you got to start thinking about passive has a lot of value, because passive takes the emotions out. Stock market and non-stock market, right? Passive investing takes the emotions out. You just put it in there and you forget it. Right? And that's exactly what real estate is, what the asset class that we are talking about. Right? Not just, even crypto is the way that we're offering, or the way I'm looking to offer is going to be the same way. There's actually an energy plan there. And then everything that we do, there's actually a partnership with the IRS. The government is going to give you depreciation benefits back. So essentially, you're making 30 to 40 to 50%, depending upon your own tax brackets, return, most likely in year one, right? You cannot do that in stock market. So once you start peeling the layers of onion, I think most individuals that I've talked to, and given my background in the tech, I talk to people with a lot of money, right? So the question that always is, well, I can double or triple or quadruple the money because I'm good at day trading, option trading. Well, you can continue doing all of that stuff, right? Play a little bit outside of that zone, put some money, right? Whatever percentage it is, in a different asset class, and try and test it out, because the benefits are definitely going to outweigh the cons of anything that real estate or being illiquid or money being stuck. You're going to realize 90% of I can't remember the exact stat, but it's over 80%. I think 90% of the wealth in the US is built through real estate, not through stock market.